Hi, Joe Cambrata here, CEO of National Business Capital. In this video, I'm going to talk about e-commerce term loans, some of the pros and cons that you need to know, some of the qualifications, whether you're working with a bank or a non-bank lender, and a few other things that you should consider or know when taking out a term loan for your business. Okay, so I'm going to keep it short and brief because I respect your time as an entrepreneur. I know that our time is limited. So the pros of a term loan is it's a set term. You know exactly what your payment is monthly, you know what your rate is, and you know your period in order to repay it. The con is, for an e-commerce business, is typically you're usually buying inventory to buy and sell. So you may want to consider a credit line for your e-commerce business. A term loan can still work great. A lot of times when you're doing a set term loan, it's good for things that need to be repaid over long periods of time. So maybe it's a renovation in your business, maybe it's hiring some employees, you want some time to hire people, get them up and running. So if you're using it to buy and sell inventory, you still can do that. A line of credit is nice because you can constantly pull money, borrow it, buy inventory, pay it back down the line and reuse it. With a term loan, you still get a set amount of money. You also get a long period to repay it. So as long as you're good at managing your money, and as that money comes back in, you're putting it back out for growth opportunities in your business. So it's just a matter of just managing the money the right way. In today's world of financing, a lot of loans and a lot of business lending is getting done through non-bank lenders. In the banking world, they're looking for strong credit, 700 plus credit score, and a lot of people have that. The second thing they're going to look at is profit. You need to have a lot of profit to get approved at a bank. But the third thing, and the most important thing, and actually probably should be number one, banks are going to look at collateral. And collateral can be a few things. The obvious is real estate. The other types of collateral in your business can be inventory and equipment. If you're an e-commerce business, a lot of businesses today don't hold inventory. They're drop shipping, or they move it so fast that they never have enough of it, so it can't be used as collateral. And then the third are receivables, B2B receivables. So let's say you're selling to Walmart or Target or other big names like that. You can leverage those receivables and get a line of credit against it. Now the problem is, and what we've seen in a lot of e-commerce businesses that we've funded, a lot of times they're direct to consumer. You can't use a consumer as a receivable. It just doesn't work. Banks don't allow it. So most of the times what we see in e-commerce businesses is they don't qualify for bank financing because they don't have the collateral coverage. And if you're an e-commerce business and you're growing nonstop and you're constantly reinvesting profits, well then it looks like you're not that profitable even though you're reinvesting those profits. And again, a bank will have a challenge with that. The good news is that there are a number of non-bank lenders out there. We have over 75 lenders on our platform. You may not have collateral, you may not have a ton of profit, so we focus in on your cash flow. We want to understand what's going on in the business right now, not only where you are, but what are you using the money for and where are you going? There are a number of lenders out there that offer term loans specifically for e-commerce businesses. Typically it'll be 12, 24, and 36-month type of terms. You don't actually want to go too long with the term loan. There are other term loan products that go out to 10 years, but you don't want to go out too long because if your business is growing, you want to be able to borrow money and constantly have the ability to re-access it. So most lenders will look at when you borrow money from them, they'll look at maybe giving you additional money if your business has scaled a lot, or if you repaid them back half of what you borrowed. A lot of times business owners will immediately say, give me the longest term. But the problem is if you take a really long term, then it'll take you a longer time to get additional money. And if you've got profitable opportunities, if you are in e-commerce, you're buying and selling inventory constantly, you want to actually maybe look at some shorter term options so you can have constant access to capital so you can continue to grow. So you want to make sure that you know all the options available to you when you're looking to borrow capital. It's not just about getting approved, it's about actually getting funded. but it's also about getting funded and working with the right lender. That's why my team and I created National Business Capital. We've pulled all of the best lenders together, and we help explain all the different lending products out there and all the different lenders, and we match business owners to the right lenders so they can grow their business, not only with the funding that they get today, but also have a place to come back to get funding as they grow. Hope you found this video helpful, and I want to wish you nothing but success in growing your e-commerce business.